Hello, welcome to the Invest in Value channel. I'm Victor, and I'm going to cover Alphabet. Now that they released their earnings, how has that changed my evaluation of this company and my plans with this company as an investor? The results are out, and the company grew quite a bit. I'm going to get into that in a minute. But the impact, or I should say, how it was received by the market was negative. So the stock price is down. So it offers a really good opportunity. Let me review what I'm looking for in an investment. First, I want a discount on that investment. Two, I want a company that's operated and performing well, and I want to know that it's the right time to buy. Let's take a look at Google and see what happened and if it is a good investment at this time. So first, the prior year performance, 2021, was excellent. 41% revenue growth, $67 billion of free cash, net income of $76 billion. That was awesome. But now they've announced Q1. Q1 was really good. They had revenue growth of 23%. Google Cloud grew 44%. Q1 free cash flow grew 15.3 billion, which was higher than the rate in Q1 of 2021. So they're they got a really good start to the year and will probably exceed this $67 billion. They grew 14% free cash flow if you compare Q1 2022 versus Q1 2021. So very good job. And they also announced that they're going to have a $70 billion stock buyback program. Good news. So it'll solidify the stock and really return some value back to investors in the form of buying back shares. My outlook has not changed. I believe this stock is oversold and at a discount. Very good upside, long-term gains. And I'm adding shares to a very large position. I bought shares today, actually one share because it's so darn expensive. And I'm going to buy another share tomorrow. So that's my plan with Google. The reason I feel that way is that, Warren Buffett recommends that we buy when everybody's fearful, when everybody's discounting, stock prices. And the news is receiving the type of performance that Google provided with a negative tone. They missed on weak earnings and revenue from YouTube miss. I looked at their financials and I think that's exaggerated. That's my opinion. I'm an investor and I get to make decisions on my investments, but I also get to interpret the actual results from the financials versus just reading the headlines. The productive thing about these headlines is it's creating more fear in the marketplace, which creates a better buying environment for a great company like Google. If you look at the stock price and what it did today, it dropped 3% today. And after hours, it's dropped more than 5%. So if that holds collectively today, it dropped 8%. This is Alphabet / Google, one of the best companies in the world, that's already dropped year to date, more than 30%. I mean, to me, that's an incredible discount on one of the best companies that I can put in my portfolio. Now, let me take a look at my intrinsic value calculator. This calculator I used in the previous video I made on Alphabet Google. All things kind of stayed very similar. Revenue growth. This was before the earnings release. They grew at 23% for the quarter, right in line with what they had historically grew at. So I'm glad that number is consistent with what they released. I had, I believe, 17%. I trimmed that down to 14%, which is the growth rate of free cash flow that they reported. And I'll grow the first 5 years, 1, 2, 3, 4, 5 at 14%, and then have an 8% growth rate for years 6 through 20. If I use those variables with a 5% discount rate and discount the free cash flows we expect from Alphabet, I get a net present value of the whole company of $2.3 trillion. The market cap has dropped to $1.57 trillion. So there's a gap there, and that gap is a discount. We look at the shares outstanding, calculate value per share. I believe that Google is valued at $3,542 per share. It's trading right now at $2,390 per share. So there is a discount of 48% if you compare the current share price to the value that I calculate for Alphabet. So Google is discounted. It really is. It has a nice discount on it. You're catching it on a very low dip. The market is fearful. It's a good time to buy stocks once things get more tamer, calmer. The fear is gone from the market. I think Alphabet, Google is going to rise really well. I can't say anything but good things about the people who run Google, the products they create. So they're operated and performing great. So real big check mark there. And then the timing is very good. I started investing in Google in 2022 when I saw that these dips were just really emotional in the marketplace. They were fear driven. They weren't, fundamentally driven. So I'm buying when there's a lot of fear on the streets, buying shares of companies that I have a lot of respect for. This video is for entertainment purposes only. I'm not recommending that you buy Alphabet or any other stock or security. Thank you for watching my video after the Alphabet earnings call. I hope you found it interesting. Do me a favor and like my video. Consider subscribing to my channel and hit that bell if you want to be notified when I release a new video. Thank you again, and good luck trading in 2022.